you've spoken to Bloomberg earlier on our story, and it says in 18 to 24 months, you're going to have WeWork behind you. You're going to be a bigger player. I think we were just looking at the numbers.
Yeah.
40 million square foot for WeWork.
For WeWork.
Versus 4 million.
4 million.
How? How are you going to surpass them?
We've been growing so much. I think they've had an edge on us of 50 times more money, 3 times longer since inception. And already in the 3 years we've been operating here in New York, we've surpassed them in number of buildings, the same in Paris, the same in San Francisco. And the pace is just phenomenal. I think it's entirely possible. And it's possible because they're the kings of co-working, not us. We do something different. We do flexible workspaces for big companies. Mm-hmm. Big companies don't work in little co-working spaces. They work in floors of buildings, whole buildings. That's our business. That one's growing phenomenally.
Okay, so, well, actually, before I get to my question, I just have to say you are now the best dressed person on this panel, and I'm very jealous of that. But back to the business at hand here. I mean, you say you're not really targeting sort of the individual people the way that WeWork is. You're going after corporations and companies. Why do they need to go through you to do that when in theory they would have the resources to just, I guess, go lease space on their own?
Flexibility. Yeah. Flexibility. I mean, we learned it and we quite admire what others have accomplished in co-working. Mm-hmm. Freelancers need flexibility, sure. Well, there's no CEO of any Fortune 500 that can predict the future 1 year, 5 years, 10 years out. They can't. Flexibility is the thing they need, and that's the thing we provide. You can do a lease, but leases aren't flexible. It requires much more than just a short-term deal.
But do you think those types of clients are going to have more staying power than, say, an individual who, I guess, maybe feel a little bit more stuck or have fewer options?
Oh, absolutely. I mean, a small group of 1 or 2 people can go back to their living room or back to Starbucks, but if you're 100 or 1,000 or 10,000, yeah, they have staying power, but they're also the bulk of the global office market. The overwhelming majority of the office market globally is just 1,000 names. 1,000 companies are half of the office market. These are the guys we focus on.
You're raising the money to go into new cities, into new areas, and double down in the cities that you're already in. I'm interested by the fact that you're saying CEOs of these large companies like Microsoft and Starbucks can't see perhaps 1 year, 5 years. There's plenty of geopolitical risk at bound. You're actually looking to go into Hong Kong. You're looking to expand into China at the moment. How do you see into the future that they are the right cities to be in, particularly amid the protests in Hong Kong, for example?
Hong Kong's tricky, and let's see exactly when we do that market. There's a dozen markets we're in now. New York, London, Berlin, Paris, and maybe with between 25 cities, you find something like 50%, 40% of the global GDP. These are the big, hugely winning cities that concentrate population, economic output. These cities are with us, and they've been winning for 5,000 years. Spreading too thin into Cairo or Marrakesh or something, I think is an error that others are making. But in these largest cities in the world, going deeper and going from hundreds to thousands of Knotel locations, that's what this financing will let us do.
And the competition, though, I mean, the barriers to entry of this, I mean, who's to say WeWork doesn't pivot into the same area that you're in, or that, Regus and those other companies that are sort of already established, who say, well, why should we let Knotel sort of get all these great customers? Why don't we just hone in on their market?
We're in the really early days, Right. It's like when eBay was reinventing e-commerce or MySpace was inventing social networking. Well, in the very early days, you see a few early players that emerge, and really the lasting strategy is the one that understands that adoption is the thing. We're at 1% or 2% right now of flexible. The rest is all leases. The mission is to replace leases, and I'll tell you, there are very few people that tell me they love leases.
I know, I just got out of one.
You have. What about the money and where it's come from? It's an interesting investor set of names that you've taken on board, almost institutional money. What many have looked to WeWork is the worry about the prospectus and the lack of clarity is, but at least they've got SoftBank backing them, Fidelity, some well-known names. Where did you look for money, and why were they different from perhaps some of the more typical VCs that we know?
Some of the largest and most sophisticated investors in the world are part of this financing, and I'm really thrilled that the huge brokerage Newmark is an existing and returning investor. The huge property company, at a certain point, the Mori family in Japan was the richest family in the world, and there's still a hugely significant real estate family there. New investors, one of the leading trading houses in Japan, Itochu, and many other very large institutions like Norwest, one of the best Silicon Valley firms, are there. And we really went for folks that had depth, strategic relevance, expertise, and really deep, long-term vision for what we could accomplish. Because we're in the early days. There's so much work to do, and we're thrilled to have their trust, but it's just work to do. I mean, we won't be having parties. I'm back at the office. I was there at 9 a.m. I'll be back there at 9 p.m.
Is there beer, quinoa, and avocado on toast at the office as well?
I will spare. I won't take the bait on cheap shots at the competition.